Well, hello to everybody and officially welcome to today's session, which is titled Reporting Business Activity on SSI and Medicaid. So my name is Molly Sullivan, and I am with a nonprofit organization called Griffin-Hammis Associates, which we call GHA for short. GHA is an organization that's been providing training and technical assistance for over 30 years to support people across the spectrum of disabilities to become self-employed and small business owners. Now, for this webinar, I'm joined by my incredible colleague, Sierra Ladroma. And Sierra will be monitoring the chat box throughout the webinar. So if you have any questions about the content, you can pop them in there and Sierra will either respond via chat or she'll let me know at some designated Q&A times and I'll address your questions. And on that note, regarding the chat box, if you haven't already opened the chat, I encourage you to do so. You can open the chat by clicking the icon that reads chat at the bottom of your Zoom window. We ask that you use that chat box to ask questions, share ideas, and leave comments. And we will, as I mentioned, stop for Q&A a couple of times during the webinar. So if you post a question in the chat, just know there might be a delay until we do Q&A before I tackle it. Lastly, we want to thank the U.S. Small Business Administration and the National Disability Institute for leading the Community Navigator pilot program that creates the space for this webinar. Now, while this webinar is funded by the U.S. Small Business Administration, all of the opinions, conclusions, and recommendations that we express here are those of us and don't necessarily reflect the views of the SBA. And lastly, in terms of some logistics, at the end of this webinar, we'll share information with you about upcoming events, and the National Disability Institute team will share information about resources that are available on the Small Business Hub website. All right, let's take a look at the plan for our time together. So the focus for today's webinar is all about reporting self-employment activity for the sake of the SSI benefit and the Medicaid that comes with it. Now, to tackle this topic, I'm actually going to take a few minutes to make sure everybody knows what SSI is and what the related Medicaid is. And then once we've got that foundation in place, we'll dig into what do you report and when do you report and how do you report self-employment activity for the sake of that benefit. Once we've covered those topics, we'll then look at some tips for reporting and managing the SSI benefit when self-employed. Now, I want to acknowledge this is a fairly big agenda. So given that, I'm actually going to do my best to stay focused on just this topic of reporting for SSI and the Medicaid that comes with it. And what that means is that we won't be covering Social Security disability insurance, which is the other cash benefit Social Security administers for people with a disability, nor will we be tackling the Medicare that comes with that benefit. But I'd like to, because we have to keep this pretty focused, What I'd like to do is take just a couple minutes and share with you some ways you can learn about the SSDI and Medicare benefits, as well as just learn more about the topics that we're covering today. So for starters, I want to point out that we have more webinars on benefits and self-employment. This webinar is actually part of a series that we started last year and that we're finishing up this year. So in 2022, last year, we actually did 5 webinars on topics related to benefits and self-employment. The first was really just a basic overview of the common public benefits. And that one went into some explanation about eligibility for Social Security disability insurance, Medicare, supplemental security income, and Medicaid. The second webinar was about common business structures and some of the key considerations in choosing a business structure when you receive SSDI, Medicare, SSI and Medicaid. The third webinar was about Social Security's plan to achieve self-support, which we call PASS for short. And PASS is a way that some people can get some help with startup business expenses. The fourth webinar we did was about self-employment resource exclusions, which explained ways businesses like, the ways business assets like bank accounts and equipment can be excluded from financial need-based benefit resource limits. So that webinar covered things like property essential to self-support, which is a special rule, and ABLE accounts, and how those can be used to support self-employment. The fifth webinar we did was, we really got into the meat of it. The fifth webinar covered net earnings from self-employment and how they're calculated. And I'm actually going to touch on that topic during our webinar today, but please know that we have an entire webinar on what we call NESE, net earnings from self-employment. So far in 2023, we've done 2 more webinars that also really get into the meat of it. We've done one that was about the effect of net earnings from self-employment on SSI, and another webinar that covered the effects of that NESE on SSDI. So you can access all of those webinars on the Disability Small Business Hub website on the events page. And Sierra, when you get a minute, if you could pop a link in the chat box to that website so folks know how to get to those webinars, that would be great. Now, we're doing 2 more webinars before the end of the year that are on benefits and self-employment, one of which is the one you're attending right now, and that's on reporting self-employment activity, business activity for SSI. And then we have one more that we'll be doing on reporting self-employment or business activity for SSDI. And that one will occur on October 18th from 2 to 3:30. And you can use the link Sierra is going to put in the chat box to register for that webinar, that last webinar, if you'd like to. Now, while these webinars can be a great way to build your knowledge, the reality is it can be difficult to take what you learn in this kind of a setting and figure out how to apply it to your situation. So if you or someone you work with would like one-on-one help understanding how work will affect benefits, how to follow the steps that I'll be sharing around reporting, then I encourage you to reach out to a person that's called a benefits planner. So a benefits planner is it's a professional that generally works for a nonprofit or sometimes a state agency or some type of an employment program. And they specialize in understanding these public benefit work rules. Now, benefit planners can go by a handful of different titles. The term benefit planner is more of a generic term. And so some of the titles you might hear are community work incentive coordinator, or a benefit counselor is another one you might hear. But really, regardless of the title, these professionals, what they do is they provide one-on-one counseling for people with disabilities about changes that can happen to benefits when working, and also the details for how to report to benefit agencies when working. Now, in every state, there is at least one benefit planning program called a Work Incentive Planning and Assistance Program, known as WIPA for short. And you can find the WIPA project in your area by using the Find Help feature that's on this Choose Work website, which is it spells out choosework.ssa.gov. You can also, if navigating a website doesn't work for you, you can also find your local WIPA project by calling 866-968-7842, or using the TTY number, which is 866-833-2967. I do want to point out that in some states, the State Vocational Rehabilitation Agency also may be providing some benefits planning as just a part of their normal services. So if you or anyone you're working with is receiving services from a VR agency, be sure to ask your VR counselor for help finding a benefit planner. And one other option is to contact your local Center for Independent Living and ask them for help in finding a benefit planner. Centers for Independent Living are nonprofits, and they provide really great support for people who experience disabilities around living independently. And some CILs actually have benefits planners on staff, but if they don't, they may be able to help you find a benefit planner in your area. So on this slide, there's a link to the national directory of CILs, and you'll have access to this slide when we when you get the materials, which will be posted on the website in 1 to 2 weeks. So I guess what I would say in summary is that really there are a number of ways beyond this webinar that you can continue to build your knowledge around benefits and self-employment. So as you listen to the details I share and the information I pass along, rather than feeling like you have to take it all on and memorize it and learn every detail, if you can't set a goal to just build your knowledge a little bit, gain a better understanding of the basics around reporting. And if you're receiving benefits, I highly encourage you get connected with a benefit planner who can provide really more personalized support for you in taking this information and putting it into action. All right, so with that, let's shift and begin to build your knowledge a little bit. And what I'd like to do to get us started, as I mentioned before, is just do a brief review of what SSI is and the related Medicaid. So you're clear about which benefit this webinar is covering. We get people who come from all sorts of different backgrounds who join this webinar, these webinars. So it's just really important you know which benefit we're talking about when we say the SSI benefit. So I'm going to take just a couple minutes to get us grounded on what that is, and then we'll dive into the reporting. Oh. Okay. All right. So supplemental security income, which is called SSI for short, is a monthly cash benefit that is, it's based on financial need, and it's also administered by Social Security. So there's really three basic eligibility rules for SSI, which I'll touch on here. The first is that the person must meet Social Security's definition of disability or blindness, or you could also get SSI if you're age 65 or older. So that's the first criteria. The second is that the person must have low resources. And resources, that term is also referred to as assets. And so those are things that a person owns that they could use to pay for food and shelter. And so common examples of resources are bank accounts or retirement accounts. Now, there are some resources in the SSI program that are excluded, meaning they don't count. Social Security pretends like they don't exist. And those are things like this one rule: property essential to self-support, which excludes assets in a trade or business. And able accounts are also excluded. A home you own that you live in is excluded. Another example is one vehicle. So there are, most assets or resources are counted, but some are excluded. And for this second eligibility rule, the low resources, the value of the person's countable resources must be below $2,000. If a person is married, the countable resources must be below $3,000 to be eligible for SSI. So that's what I mean by low resources. Now, the third eligibility criteria is that the person must have low income. So what's income? Income is money that the person receives in a given month. So common examples of income are, well, Social Security disability insurance, that other Social Security benefit. That's an example of unearned income. And then another example of income is earnings. Now, when a person is self-employed, their net earnings from self-employment are considered their earnings. And I'm going to review some details about the self-employment earnings later in this webinar, but for now, I just want you to have it in your mind that when it comes to income, Social Security does look at earnings for the sake of the SSI benefit. And it's also, in terms of income, one of the things that can count is the value of free food or shelter the person gets, since the SSI benefit is intended to pay for food and shelter. Now, there are some types of income that don't count, like food stamps, which is also called SNAP for short. Housing subsidy payments don't count, but for the most part, most income counts. So a person's income needs to be below a particular limit. And what Social Security does is they have some income deductions that will reduce the amount of the person's income that they'll count. And there's a little calculation that they use to figure out how much of a person's income is countable. And when they use that calculation, they do take into account a person's net earnings from self-employment. That's one of the types of income. So they use that in the SSI calculation and figure out how much SSI a person can get and also if it's low enough to be eligible. Now, we actually did a webinar about net earnings from self-employment and the effect on SSI. So that's one of the webinars I encourage you to check out if you want to learn more about that. And you can also see examples of how this SSI calculation works by going to a website Social Security has called Understanding SSI Income. And Sierra, when you get a minute, if you could put that website in the chat box, that would be great. For folks who want to understand more about how that SSI benefit is calculated, Social Security has actually some examples on that web page that's Understanding SSI Income. So they are looking at income. That's the third criteria. And they look at most income, not all income. But when they look at income, they have these deductions. And what's left, countable income, has to be low enough. And by low income, what they mean is countable income that's below the maximum SSI benefit of $914, which is the amount in most states, the monthly amount in most states this year. The amount a person receives is actually that maximum SSI benefit of $914 minus their countable income. So that's how they figure out the SSI benefit amount. Not only do they use that SSI calculation to find out if your income is low enough, but then they also use it to calculate the benefit amount. Okay, I realize that was a lot. And I know that there's folks in this webinar who are very knowledgeable about SSI and folks that are new to the concept of SSI and some of these rules. So if this is new to you, no worries. Remember, just take in as much as you can. Don't try to retain it all. And for the most part, what I want you to get is SSI is a financial need-based benefit. And the benefit will be affected, it will go down if you have other income. Which is why it's important to report, which is what we're going to talk about today. Now, if you are someone who's receiving a benefit and you're not sure if you're receiving SSI, it's important to figure out which benefit you're receiving so you know what rules apply to you. And there's a handful of ways to figure out if you are receiving SSI. You can log into your My Social Security account. And in there, you should see which benefit type you have. We'll say supplemental security income, if you have that one. You could also call Social Security, and you can ask them to tell you which benefit you have. That's a great way to figure it out, or I should say it can be. And you can also look at recent letters that you've received. So that's SSI and what it is. So hopefully you feel clear about which benefit we're talking about today. Now, I do want to briefly look at Medicaid and how that fits into this picture, so you understand how these two can come together. Okay, so Medicaid is a financial needs-based health insurance. And it is actually funded by a combination of state and federal dollars, but it's really designed and administered by state agencies. And so what's important to know from that is that Medicaid is very different from state to state. The eligibility rules can vary from state to state. Coverage rules can vary from state to state. Even the name of the Medicaid program can be different from one state to another. So given that there is so much difference from state to state, I'm really only going to share some high-level information with you about Medicaid. So if you're receiving Medicaid and you're working with someone, or you're working with someone who's receiving Medicaid, and you've got some questions about the way self-employment might affect Medicaid, I really encourage you to check in with a benefit planner. That's really helpful to do since there can be differences from state to state. What I can share at a high level is that for a person to be eligible for Medicaid, they need to fit into a Medicaid eligibility group that's allowed by the state. And one of the most common Medicaid eligibility groups that's available in the majority of states is this SSI group. And with that group, a person who is eligible for SSI automatically gets Medicaid. It's pretty cool, actually. They kind of come together. Now, there are a handful of states that don't just automatically give Medicaid to someone who has SSI, like Virginia, that's an example. But usually there's just one or two rules, additional or different rules that a person has to meet, a person with SSI has to meet to get Medicaid. So even in those states where Medicaid isn't automatic with SSI, most people who have SSI are going to be eligible for Medicaid. Now, for this webinar, we're going to be sharing information about reporting for people who get Medicaid because they have SSI. And so what happens is really by reporting to Social Security in most states, if you have SSI, you're taking care of reporting for Medicaid. It is good to just confirm with your Medicaid agency if they require any extra reporting. But since there are so many differences from state to state, I can't speak to all of them, but we'll say that generally speaking, when you're reporting to Social Security for SSI, in the majority of states, at least 34, 34 states, you're also taking care of reporting for your Medicaid. I do, again, just want to say, good to talk with a benefit planner in your state so they can give you your state-specific rules around Medicaid, including reporting for Medicaid. Okay, what I'd love to do, one just little final slide on sort of the what is SSI and Medicaid piece. And I just want to give an example of someone who's receiving SSI and Medicaid to make this all a bit more concrete. And then I'll continue to come back to this example as we go through the webinar. Okay, so our example person is Chen. She's 28 years old and lives in Maryland. She experiences blindness and recently completed her bachelor's degree in accounting. She had an unpaid internship last year, but that's been her only work experience. So she doesn't have any income other than SSI right now. And she has $1,200 in countable resources, which is the balance in her checking account. So her only resource is her bank account. So she receives $914 per month of SSI, and she gets Medicaid because of it. So she lives in one of those states where she automatically gets Medicaid. So you can see from this example that Chen meets all three of those SSI eligibility rules. She was found to meet Social Security's definition of disability or blindness. Her countable resources are below $2,000. Her only resource is her bank account, and it's got $1,200 in it, which is below the limit. And she has no income, so her countable income is clearly below the maximum SSI amount of $914. And since she has no income, that means she is eligible to receive $914 of SSI, the maximum amount. Lastly, because she is eligible for SSI and she lives in Maryland, she automatically gets Medicaid. Okay, so hopefully what we've done at this point is we've brought the rules and your understanding about SSI to the front of your brain, as well as the Medicaid that comes with it. And so now what I want to do is shift us to really the focus of our webinar, which is about reporting self-employment activity for the sake of the SSI benefit. You know what I might do, actually? I think what I'd love to do, since we're at kind of a good breaking point, is I'd love to pause and just check in and see, as it relates to all of those details about what is SSI and Medicaid, if there's any questions that have come in. Sierra, do we have any questions in the chat box for me related to SSI eligibility and Medicaid?
Hey there, it's Sierra speaking. We do have one question, and it's from Doris.
Great.
And it reads, I'm planning on starting a business sometime next year. I'm thinking about applying for PASS. Do I have to apply for rehabilitation services before applying for PASS?
Oh, great question. First, Doris, what I would say is that it's great that you're exploring all of your options for getting help starting your business. So kudos to you for researching. I encourage you to check out the webinar that we have, the recorded webinar on PASS, if you haven't yet, if you'd like more of an explanation about that work incentive. And the other, so to answer your question, no, the Social Security Plan to Achieve Self-Support work incentive, it doesn't require that you be working with vocational rehabilitation in your state. The folks who make decisions about the PASS application, they want to make sure that your work goal is a good fit for you. And when vocational rehabilitation is involved, they can sort of defer to the VR agency's decision that it's a good goal for you. When the VR agency isn't involved, you'll need to provide some additional information to explain to them why the business idea is a good fit for you. So I would say you should be prepared to give a bit of an explanation about why it's a good fit for you. And then the only other thing I would say is that the Social Security Plan to Achieve Self-Support, the PASS, the people who make the decision to approve or deny that, they do like to see that you've found and you've researched and looked for other funding. So if you do have other funding, they love that. They like to see that you're not relying on just one entity, but it's not a requirement. So if there's reasons why you haven't pursued that, I would just say be prepared to give them an explanation as to why not. I've worked with a number of people over the years who've used PASS and have not been working with vocational rehabilitation. So it's definitely not a requirement. It's just you may need to provide some additional details.
Okay. Thank you.
Absolutely. Thanks for the great question. Okay. Great. So I'm going to move us on to what to report. And so on slide 11, I actually have for you a list of kind of the key things, and I've broken it into two chunks. So I've got a list of things that you would report when you first open the business. And then I've got a list of things that you would report on an ongoing basis. So what I'd like to do is just give you a quick overview of the list right now. And then what we'll do on the following slides is I'm going to dig in to each of them. And so we'll kind of tackle them one at a time, because each one of these, some of them are pretty straightforward, and some of them have a little bit more meat and detail to them. I do want to clarify that when, well, I'll just start at the top. So when a person receiving SSI opens their business, they do need to contact Social Security and share a brief description of that business. So Social Security understands what this entity is that they're, what they're doing. And also, it's important to report at that time the projected net earnings from self-employment, specifically for that first year in the business. And then also a list of business assets. Now, in regard to the business opening and what I mean by that, I want to point out that there's no, and I get this question often, there's no like specific date in Social Security's rules that defines like when the business opens. Generally, for Social Security purposes, they want to know when the business is beginning the operations that it was set up to do. So if we take our example of Chen, who recently got her accounting degree, and so let's say she's decided to become a self-employed accountant. So after, in this scenario, let's say after several months of business planning and opening her business bank account and all the other startup activities, she's finally ready to kind of put herself out there, start marketing her services and working with clients. So in that situation, when she begins marketing her services and bringing in new clients, that's often the start of the business for Social Security purposes, because that's when she's first engaging in that actual self-employment activity. She's done with the whole planning phase. Now the self-employment activity is beginning. Now, if you or someone that you support isn't really sure when their business is considered to be open or not, then I would just say reach out to, if you can, get in touch with your Social Security claims rep, claims representative, the person at Social Security that manages your benefits, oversees your claim, just so to say. And you can just kind of explain what you think the opening day is for your business and why, and make sure they're on the same page with you, or see if they have a different interpretation. Since there isn't like a definition anywhere in the rules, it can be a little vague. But if you've got some logic for when you think the business should be considered open, then you can let them know, and then you'll know. So on an ongoing basis, let's look at the second chunk on this slide. On an ongoing basis, when you're self-employed, someone who's receiving SSI and self-employed, then you should be reporting a couple things. In terms of income, you should be reporting updated financial projections if your estimates ended up being too high or too low. And the second thing is that you should report a business tax return. So actually literally submit a copy of your business tax return to Social Security when you complete it each year. So usually you're doing that before April 15th. So when you get that completed, you would give a copy to Social Security. And lastly, on an ongoing basis, if in your business you acquire new assets, then you're going to want to report new business assets to Social Security. And we'll talk a little bit more about that. The frequency at which you do that, your Social Security may tell you, just keep a list. And when we do our review, we'll ask for the updated list. And some local offices or claims representatives may want you to report as you get new assets. So there's a little variation on how they handle it, but the key is to know you need to be prepared and proactive about keeping an updated list of your business assets and sharing that with Social Security. So you can see we've really got two chunks: things you do when the business opens and things you do on an ongoing basis. So let's look at the first item on this list, which is the description of the business and sharing that with Social Security when the business opens. So when initially reporting the business to Social Security, you're going to want to be prepared to share just some basic information about the business. If you sort of imagine as a comparison, if you were wage employed, when you contact Social Security, they want to know some details about the job. So similar kind of thing happens when you're self-employed and you report that you've got a business that's opened. Social Security wants to know a few details about the business, right? So the things listed in their rules that they've indicated they're going to want to know a little bit about is, first of all, the name of the business. And then the second is just a brief description of what the business does. What are the services you provide? What are the products you sell? Just a little bit of what the nature of this business is. It's helpful to share the business structure. Did you decide to be a sole proprietorship? Are you a partnership? Do you have a limited liability company? So it's helpful to give them some details about that. And if there are any co-owners, you want to give them a little bit of information about that. In particular, it's helpful to share, if you have co-owners, how you're splitting the profits of the business. So you don't need to give some huge, long business plan to Social Security. It's not what you need to do. It's really just a few key details that they need. So how do you report this information? The reality is there's no specific form. There's no SSA form XYZ that you fill out with these details. So there's a couple different ways you can go about it. You can call the local Social Security office or the toll-free number, the national toll-free number, that one that's 800-772-1213. And you can just verbally report to them. Tell them I've started my business, and in theory, they should ask you for some of those details. So that's one way. Another way is you could go to your local office and tell them when you're there. Say, I'm here to say and report that I am in business, and the person behind the glass will likely ask some questions about the business. Another option that you could do, if you want to have something in writing that you submitted, you could put details about the business, a description of the business, on that SSA Form 795. And that SSA Form 795 is really, it's like an official blank piece of paper. The 795 literally has just a place for your name and your Social Security number at the top. And then it's a big blank space on the page, huge blank space for you to write whatever you want. And then on the next page, there's a place for you to put your name and your contact information. So if you want to more sort of officially record and report that you've started the business, you could put it on that 795 if you wanted. Ultimately, the key here is just to communicate to Social Security. I started this business, and I'm expecting I'm going to start having some money coming in. Okay, so that is about reporting the description of the business. I'm going to take us to the next topic, and then I'll check in for questions. So the second item that you want to be prepared to report to Social Security when you become self-employed is your projected or estimated, you could use either of those words, your projected or estimated net earnings from self-employment. And I'm going to call that NESE. NESE. So you're going to be reporting your projected or estimated NESE to Social Security when you open your business. So what is NESE? So NESE is the owner's self-employment earnings. It's what you project you're going to have from earnings from your business. Remember, SSI is a financial need-based benefit. So Social Security needs to know, what kind of income are you going to get from this business? So they want you to give an estimate of what you think. There is an entire webinar on this topic of NESE. So I'm just going to give a very brief recap of it right here. If you want more, just know there's like a full hour webinar on this topic that you can check out. For the sake of a recap, NESE is basically the profits of the business less a small little deduction. We take off a little deduction from that net profit. And it's really just a simple two-step calculation. That's it, 2 steps. The first step to determine NESE is to take the business revenue, subtract the business expenses, and we get net profit. So let's take our scenario, person Chen, and let's say that she's starting her business and she's expecting that she's going to have $36,000 in payments from her customers this year. That's her business revenue, her projected business revenue. And she's also expecting she's going to have about $12,000 in business expenses, things like software and marketing expenses and business insurance and licensing fees. She estimates all of that's going to be $12,000. That leaves $24,000 of net profit. Okay? That's how much her business, she's planning for her business to make. That's step 1. Step 2, we take that net profit and we multiply it by 0.9235. The reason that we do that is because it's meant to even the playing field a bit with people who are wage employed. People who are wage employed, they only have to pay 7.65% in Social Security tax, and then their employer pays another 7.65% on their behalf. When you're self-employed, you pay both the 7.65% you would normally pay as a worker, plus you have to pay the 7.65% in Social Security tax that the employer would pay. So you pay extra tax, Social Security tax. It's not really extra, it's just you're paying for the portion that an employer would normally pay for. That's what happens when you're self-employed. So this second step in the NESE calculation is meant to account for the fact that, really your net profit, yeah, it might be $24,000, but you have to pay 7.65% of that in extra in Social Security tax as compared to a wage employed person. So they let you take that as a deduction. So multiplying net profit by 0.9235 is reducing it by 7.65%. And if all of that is like, boom, I feel like my head's going to explode, don't worry about it. Just know that the second step in the NESE calculation has a little deduction. All of that is to say, our scenario person Chen ends up with $22,164 in projected or estimated NESE for the year. Now, in the world of Social Security, they're going to take that annual NESE and they divide it by 12 to come up with the monthly amount. So they would say, okay, then it looks like your estimated monthly NESE is $1,847. And as a reminder, for this particular webinar, our focus is on reporting. So I'm not going to go into the nuances of then how that 1,847 affects the SSI benefit. And we do have a webinar on that. That is the one that's called Net Earnings from Self-Employment and SSI and Medicaid. So I encourage you to check that out. And if you want, you can also see examples of the SSI calculation and how earnings affect the SSI calculation by going to that web page. Sarah posted a link to it before. It's the Understanding SSI Income webpage. And maybe Sarah, if you could just post it again, that'd be great. So I'm going to keep us focused on just the reporting piece of this process, okay? So given that that SSI benefit is going to be affected by the person's NESE that they report, their projected NESE that they report. Let's talk about how you do that reporting of the projected NESE to Social Security. So let's move on to that next slide. All right, so when an SSI beneficiary opens their business, as I've established, Social Security needs them to report their estimated, their projected NESE that they're going to have for the year. Now, what happens when making that report is that Social Security is going to use that projection as an estimate, and then they're going to pop it in the person's account. So let's take Chen, for example. It was 1,847. So Social Security would say, okay, you're estimated to have $1,847 of earnings. So we're going to pop that in your account, your Social Security account as an estimate, but we're going to start adjusting your SSI check based on that. And then at the beginning of the next year, when Chen does her tax return, at that point, we'll know for sure what her net earnings from self-employment are, because the previous year will have ended. We'll know for sure what all of her revenue was. We'll know for sure what all of her expenses were. And that amount will be reported to the IRS on a business tax return. And so she will have her official final net earnings from self-employment that she can report to Social Security. So at the beginning of the following year, when she submits that tax return to Social Security, they will reconcile the payments they gave her the previous year. So what I mean by that is they'll look at the tax return and they'll say, oh, okay, Chen, well, it looks like you really ended up with, I'm going to say 10,000 more in net earnings from self-employment than you expected, which means we paid you too much SSI. And so that can result in an overpayment. Or it could be when they get the tax return, they see that Chen's net earnings from self-employment were 10,000 less than she projected. And if her earnings were less than she projected, then that means Social Security owes Chen some SSI. And so they would calculate and they'd say, oh, okay, well, we owe you SSI to reconcile for last year. So as you can see, what's super important here is getting as good of a guess as you can on what your projected or estimated NESE is going to be. You know, we don't have a crystal ball. There's no way for us to know for sure. It's gonna be a guess no matter what. The goal is for you to be making an educated guess. So rather than just saying, this is what I want to be making in net profit for this year, ideally, what you're doing is you're putting some thought into what you think your net earnings from self-employment will be this year. And so that means taking some time to make a list of what you expect or what's realistic for business revenue and what you expect your expenses will be for your business to make that revenue happen. Now, if you're someone who's writing a business plan, naturally you're going to be doing that as part of the business plan. And so that's awesome. That's great. You could just take the numbers you have in your business plan and you can share that with Social Security. Some people are not doing a business plan. Maybe they just have a very simple self-employment activity they're going to do and a business plan feels overkill. If that's the case, it's still important that you pause and you think a bit about what would my business revenue likely be? What's realistic for me to do, given the amount I could work, given what I could get paid doing this work, and given the number of customers I think I could get. So you want to put some thought into it rather than just giving a random guess. And so I want you to know that when you do report, this is a heads up, that when you do report to Social Security that you're opening your business, I want you to be prepared for them to say, or I should say to ask you, and how much do you project to have in profit this year? What do you expect your net earnings from self-employment to be? So think a little bit ahead of time before you report that you've started your business so that you're prepared to give a number that's an educated guess. How you report the information is, again, there's no specific form. And so really, ideally, what you're doing is you're contacting Social Security when you first open the business and you're saying, hey, I'm opening this business and here's a description of it. And here's what I'm expecting for projected profits over the course of the year. So if you're calling them, just be prepared to share that detail. If you're going in, be prepared to share that detail. If you're using that written blank official form, the 795, write it on there. So that's really the ideal time to be prepared to share that detail. This process of projecting, giving a projected or estimated net earnings from self-employment to Social Security can feel kind of anxiety producing, in part because, the SSI benefit is going to be adjusted because of it. Ultimately, it will be reconciled when you do your final tax return. But in the meantime, you want to be getting an SSI benefit that's as close to the reality of what you're really making, right? So I want you to know that it is absolutely possible to revise your projection once you've given it to Social Security. You can recontact them and say, whoa, things aren't going as planned. So let's pop to the next slide and I want to check in about that. And then we'll talk about, I'll check for questions. Okay, so now that you've learned that Social Security is going to adjust the SSI check based on the estimated or projected NESE, the first and key detail I want to communicate is the importance of tracking and monitoring monthly revenue and expenses. So important. It's so important for so many reasons. Not only is it important to track those details for the sake of knowing whether, how much money you're actually making, but it's also important to have those details so that you can do your taxes at the end of the year. And so you can report appropriately to benefit agencies. So really important. And it's important for just running your business and managing your business, knowing if you're doing okay, the business is going all right. So it's important, first and foremost, to come up with a system that works for you for tracking essentially your net profit. That's what you're tracking, your business revenue and your business expenses. In addition to tracking it, it's really good to then pause every so often and compare what you're actually getting in net profit to what you projected. Now that's good to do each month. But at the very least, you'd want to be doing that at least once a quarter. Really ideal to do that at least once a quarter. And then if you find that your projections are way off, then contact Social Security and let them know. Say, whoa, like in Chen's example, I had projected to make all of this business revenue and it's just not coming in. I'm not getting the customers as quickly as I had expected, or they're not giving me as much work as I had expected. Or I have more expenses than I had expected. And it could be the reverse. It could be you open and holy smokes, business is going gangbusters and you're making way more than you thought. And so you want to adjust it to make sure you don't end up in an overpayment. So you contact them and you say, hey, business is going great. I got to revise my projections. I'm projecting much higher. So the key to revising, giving a revised projection, is tracking what's happening and monitoring it. And then once you've done that and you compare it at least once a quarter to what's going on, if it's really off, then you would want to contact Social Security. And you can contact them using all the same methods that I explained on the previous slides. You can call, you can go in, you can write something up and mail it in. Okay, so I'm going to pause and Sierra, are there any questions in the chat box about this whole idea of reporting the description of the business and coming up with and reporting projected financials or revising them?
Hey there, Molly, this is Sierra speaking.
Oh.
We don't have any questions right now, so we are good to keep going.
Great. Fantastic. Okay, well, I'm going to move us on to the third and final key detail to report when the business first opens. So this final detail is about reporting business assets. And the reason this is important is because, as you remember, SSI is a financial need-based benefit, and they take into account what you have in resources. They count the number of resources you have, and your resources need to be below the resource limit. But they do have a resource exclusion for people who have a trade or a business. And so Social Security will exclude assets that you have in a trade or business if you're currently using them. But the only way they know to do that is if you give them a list of what your assets are that you're using in your business and share that with them so they know. So when it comes to reporting that you've opened your business, generally speaking, you're going to have a business bank account. I mean, you should have a business bank account. That's highly recommended for multiple reasons, but it is really good to have a designated business bank account where you deposit your business revenue and you pay your business expenses out of it. And so that business bank account is eventually going to have more money in it, right, as your business grows. And so you want to communicate to Social Security, hey, I've opened this business and I have this business bank account. And they can exclude it under property essential to self-support if it's considered to be in use for your business. So for them to do that, you do want to make a list of any business assets you have, including a description of how they're being used in the business. That property essential to self-support rule, for it to apply and to exclude business assets, you have to have the assets they have to be in current use. And really that means you've used them in the last 12 months or you expect to use them in the next 12 months. It's pretty generous in terms of the definition, but Social Security needs to understand how it's being used. So be prepared to give just at least a sentence description of what that is. So how do you report these business assets? Really, you can do it the same way you report the description of the business and the estimated NESE. You can call and be ready to say what the assets are verbally communicate it. You could go into the local office and explain there what your business assets are, or you could include them on the written, if you want to use a written document with these details, you could include that list of assets on there as well. So really, you would be reporting just like you do the others. So that's it for business assets and how you report when you open your business. And we do have a whole separate webinar around business resources and related exclusions. So I'm not going to go into the weeds of that here. Really, the focus just is more on reporting. Okay, so now I want to move us to the ongoing reporting. So there are really three core ongoing reporting activities for SSI. The first one we actually already talked about, which is great, and that is revising projected financials. I do want you to know with SSI what tends to happen. You report your projected NESE when you first report that your business is open, right? And then in the beginning of the next year, you provide your Schedule C or CEZ or your Schedule SE. You provide your business tax return. And when you do that, Social Security will likely say, okay, well, we're going to assume whatever you made last year is what you're going to make this year. So they'll assume whatever your actual NESE was for last year will be your NESE for the next year, which means you just need to be prepared to let them know if you expect your NESE to be different. And if you do, that's fine, that's great. It's just a matter of communicating it, right? But for you to even do that, you also then do want to put a little bit of thought into what do you expect in the next year? Do you expect your business to do more in revenue? Do you expect expenses to be the same or less? What does that mean for your expected NESE? So it's really helpful at the beginning of each year to do a little bit of planning for your business. Arguably, that's good to do anyway, right? You want to start the new year with some thoughts about how you want it to do and grow. It's just extra helpful to do that so that you have a good projected NESE to give Social Security if it's going to change. Okay. It's also good to be prepared to provide a revised list of business assets. So it's not uncommon for a person in business to acquire more business assets or to not have as many, to sell business assets. So just be prepared to give an updated list to Social Security as things change. Your SSI claims rep may want you to report at those changes as they occur. Some of them just want you to report when they do a redetermination. I would recommend you always keep just kind of a running list of your assets and when you got rid of them and when you've gotten new ones. Just put some dates around them and then a brief description of how you've used them. And then lastly, for ongoing reporting, I've already alluded to this. So important that you do your business tax return and then you submit a copy to Social Security. They use that business tax return to serve as your sort of official final NESE. And they then take that number and they reconcile the previous year to figure out if they paid you too little or too much. So how do you submit your business tax return? For this one, you do actually have to get that tax return to your local office. So you're either going to be mailing it in or bringing it in to the local office. Yeah, and in terms of reporting changes in NESE or business assets, you could communicate that by phone, in person, or by mail, whichever works best for you from your experience with your local office. All right. I have some tips I want to share, but before I do that, well, actually, let me share some tips and then I'll open it up for some final questions. Let's do it that way. So really the tips that I've got for you on slide 18 are really a summary of everything that I've shared, and they all support making those reporting activities happen. So the first tip is to put a little time and thought into what you expect your projected NESE to be. And that means taking some time to think about what's realistic for you around business revenue, and taking some time to estimate what kind of business expenses you'll have, how much they'll likely be. Again, there's no crystal ball, there's no way to know for sure, but you at least want to be making an educated guess around what your projected NESE is, rather than just a random guess or a guess of what you wish. You really want to be making an educated guess. The second tip is to record each month record your business revenue and your business expenses. Come up with whatever system works best for you. There's all sorts of different ways to record and keep track of your business activity, financial activity. Some people, it might be pen and paper. Some people, it might be an Excel spreadsheet. Some people may use QuickBooks or some type of accounting software. And some people may have a bookkeeper. It can look different with every person. You may be doing it on your own. You may have somebody support you. It's really a very personal decision as to how you're going to go about tracking your revenue and expenses. The key is to come up with that plan and use it. So that's the second tip. And the third is to then, at least once a quarter, compare your actual net earnings from self-employment to your projected, to see if there's a difference that's going on there. And if there is something substantial, to then communicate that to Social Security so that they can adjust the amount of SSI you're getting, so you don't end up with too big, like a big overpayment or a big underpayment. The third tip is to then also create a little time when you're first starting your business to create a list of business assets. And at first, what's true with most businesses is it's small. You're often just opening with a business bank account. But then take that list and update it as things evolve and change in your business, so that you always have a running list of what your business assets are and how they're being used in your business. And lastly, the final tip is to then do a business tax return each year and submit a copy of that to Social Security. And we've talked about that quite a bit already, so I'll leave it at that. Those are sort of the core tips that I would suggest. And so on that note, Sierra, if there are any questions in the chat box, I'd love to address them before I turn it over to the NDI team.
Hey there, Molly, this is Sierra speaking. So we have one question that came through, and it asks, does the business tax percentage vary from state to state?
Yeah, great question. So what's true is there's different taxes. So there, I guess if the tax that's being referred to as a federal tax, like the Social Security tax, that doesn't change from state to state. But there can definitely be business taxes that vary from state to state, and even business taxes that vary from city to city within a state. Taxes can get very weedy, and so there can be variation from state to state around the taxes that you owe, for sure. Really important to, as a part of taking care of any tax responsibilities, to consult with a CPA, a certified public accountant, a tax advisor as you move forward. It's a really helpful thing to get done, especially in the beginning, to get a good solid start on your business.
Thank you. I have one more question.
Yeah.
And sorry, this is Sierra speaking.
Yeah.
Do you have any resources or any information on just dealing with NESE stuff with Medicaid only?
What's a little tricky about that is Medicaid is different from state to state. I think my 2 cents would be to keep a really good record of what your business expenses are and what your business revenue is, so that you have the reality of what your NESE is. How your state counts it, it's going to be different from state to state. So I think aside from keeping a good solid record, my other 2 cents would be, if you can, get connected with a benefit planner to help you understand your state's Medicaid rules around NESE. Every state Medicaid has policies. Not all of the policy manuals are online, but they all have policies about income and resources. And so it could be helpful to talk with a benefit planner to see if they can help you better understand what the rules are, so you're all playing from the same rule book when it comes to reporting your NESE and how that affects your Medicaid, in the event that your Medicaid isn't based on SSI. I hope that was helpful. It's tricky when it's a state-specific thing. Sarah, are there other questions or any follow-up questions to that?
This is Sierra speaking. No, we're good. Thank you.
Okay, great. Well, I so appreciate everybody's questions and your time today. I hope you picked up some tips or helpful information.